Hey, what's up guys, John here. Billionaire bond king Jeffrey Gundlach just reported that 88% of U.S. states have skyrocketing unemployment.
If 88% of the states are reporting rising unemployment, how can it be that national unemployment remains stable at a very, very low level?
Meaning, the economy might not be as stable as we've been told. This soft landing might actually not happen. Remember Janet Yellen in August of 2007 saying soft landing incoming. Then, in March of 2008, Bear Stearns crashed and it just collapsed. And after that, the great financial crisis set in and things were never the same after. But when you look at everything that he's saying is coming next, you look at what Howard Lufkin, who also a billionaire, you look what he's saying the Fed is going to do next.
If they get it wrong, they're going to get it wrong by staying higher for longer. And I think that is likely to occur.
You start to connect the dots on where consumers are. I believe what you're going to see next is probably the greatest opportunity in American history to create wealth for yourself and your family. I'm going to connect the dots for you in this video and show you where we're likely going next. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's going on in America's economy. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Take a look at this. So, billionaire bond king questions unemployment data. Hard to believe. Jeffrey Gundlach notes 88% of U.S. states report rising unemployment numbers. Amid a seemingly growing list of a major company layoffs in 2024, one billionaire bond fund manager is raising questions over some data. During an interview on Making Money with Charlie Payne, Double Line Capital CEO Jeffrey Gundlach, known as Bond King, pointed out state unemployment numbers he described as hard to believe. Amazingly, 88% of states, and I think they have DC in there, so 51 of them, 88% of them are reporting rising unemployment over the last 6 months, and I'm having a very hard time squaring this circle, Gundlach told, Charles Payne. If 88% of states are reporting rising unemployment, how can it be that national unemployment remains stable at a very, very low level? It's a good question. It's a good question. Data from the December jobs report shows U.S. unemployment rate unexpectedly fell to 3.7% after rising for 3 straight months, driven by a sizable drop in jobless rate for teenagers. However, a recent report from business and executive challenger Gray and Christmas found a pace of job cuts in U.S. employers accelerated in 2023 with the number of layoffs surging 98% compared to the previous year. So when you start to connect the dots here, and you start to look at, bankruptcy hitting a 13-year high, you have to ask yourself, what's going to happen next? Well, in December 13, 2022, so just over a year ago, according to jointeconomiccommittee.gov, inflation was costing the average family $8,963 over that 12-month period. I mean, you think about that. If the average family maybe is making $70,000, it's like a 15% additional tax that they're paying on top of their traditional taxes. It's a really, really big problem, right? And this situation is likely going to get worse. I mean, $747 a month is what it's actually costing people. And at the same time, when people don't have money, what do people do? Well, they depend on credit. Credit cards, buy now, pay later. They depend on lines of credit to set the gap and really close that gap for them, right? Well, interest rates on credit cards are the highest that they've ever been. The highest they've ever been. November 2023, it was 21.47%. You scroll all the way down, even during 2007, 2008, it was 12, 13%. You go all the way down, even into the 90s, 96, here it's 15, 16, 18% is the highest. You start to look at this and you're starting to realize, with $17 trillion in outstanding consumer debt, a job market that's softening, and inflation that's remaining, some would say more elevated. Fed's favorite inflation gauge rose 0.2% in December and was up 2.9% from a year ago. It's equating to one major thing. A mass sell-off of cars, of homes, of assets. That's what we're going to likely walk into. And what I believe is going to be a very, very big change in wealth in this country. Howard Lutnick says inflation is still too high and the Federal Reserve is keeping interest rates higher for longer. I believe that is going to be the case. Now, some people might think, hey, we're going to see 3 rate cuts, 4 rate cuts, 5 rate cuts this year. Maybe, it's possible, but many of those same people thought we were going to cut interest rates in January of 2023, and that did not happen. And with this inflation data coming in, it looks like we could see a situation where inflation data is going to push interest rates to remain higher for longer, or possibly it's not off the table, maybe even another rate hike. It's possible. Howard Lutnick is also a billionaire saying the same exact thing. So you look at what they're saying. Hopes for rate cuts are the problem, not 3% inflation. Business Insider. Inflation jumped in December, complicating Fed aim. Right? This came 2 weeks ago, and then inflation data again comes out. So Goldman Sachs expects the Fed to cut interest rates. Right? That's what they said 1 week ago. And then this data is coming out. They've said this so many times, and I personally would not bank on it until it actually happens. And that, I think that's very, very true with everything. Don't bank on it until it happens. You look at all the data and then you make an educated decision on what you think happens next. And, I mean, what's very fascinating here is when they show you this data, they say, oh, you know, it's 2.9%, but then they exclude food, they exclude energy. When you look at what we're in right now, many would call it an energy crisis and a transition to green energy. And if that happens, and we do move in this direction, which it does seem like this is what's going to happen, it's likely going to be inflationary. Because when you restructure energy as a whole, how do you do that with driving costs down lower? It's likely going to be a large investment. And so as utility bills rise, low-income Americans struggle to access not energy, clean energy. You look at the same thing happening with food prices. Food prices up 5.8%. This is from United States Department of Agriculture. So you start to connect all these dots and you'll start to see that we're walking into a sell-off. And I think that's why, you know, you have $6 trillion sitting in money market accounts right now, just waiting to be deployed. $6 trillion. This is the highest it's ever been. And you have all these billionaires saying the same exact thing. You have a lot of really wealthy people selling off stock, whether it be the Walton families, whether it be Zuckerberg, whether it be, you know, tech CEOs across the board. Warren Buffett liquidating $9 billion in stock. And then you have, of course, CEO of JP Morgan Chase, Jamie Dimon, liquidating $141 million in stock. Why are they all doing this? And when is it ever that the rich don't make the right move and then the middle class and the 99% do? It's always the other way around. It's usually the middle class and everyone else finds out last, and then the rich end up getting a lot richer. And to me, it looks like they're positioning themselves with a lot of cash and putting themselves in a really good spot. Foreclosures in Brooklyn more than doubled last year. Many were in one building. And so it says the number of Brooklyn homeowners at serious risk of losing their home through foreclosures more than doubled from 2022 to 2023, with 541 homes being the subject of first-time foreclosure auctions last year compared to 180 in 2022. Arbor Realty forecloses, and these dates are important because all this is like the last 24 hours, January 25th. Then Arbor Realty, this is January 24th, the last 48 hours. Arbor Realty forecloses on Houston complex's short seller highlights distressed loan book. And then here, this is today. Capital One credit card delinquency net charge-off rates continue to climb. Capital One financial credit market metrics worsened in December, exceeding pandemic levels. The company's credit card delinquency rate rose at 4.61%, increase from 4.55% in November, and sits at 68 basis points higher than December 2019. Its net charge-off rate is 5.78%, rose from 5.18% in November, and companies are 4.43% 4 years ago. So you see the trend. Its credit card lending activity increased to $147.7 billion, up 1.9% from November and 12% from December 2022. I mean, you start to connect all these dots. Bread cuts expenses as charge-offs rise sharply. It came out yesterday. Persistent inflation, higher inflation causes a sharp increase in charge-offs and delinquency rates for Bread's financial co-branded credit card accounts during the fourth quarter. And then you have 40% of all student loans that are going unpaid. So what do I think is going to happen? I think it's going to be a gift for entrepreneurs, for investors to go out there and, you know, really level up. Unfortunately, I would rather none of this ever happen. I would never want anything, like what's likely coming to happen. But we're in a situation where corporations and large investors and those that are prepared are going to move out there and start buying up nearly everything when this crash happens. I mean, they're sitting on all this money for a reason. You think they're just going to sit there with just holding the cash? When they start seeing massive discounts and massive, reductions on residential real estate, on commercial and office real estate, on businesses going under, what do you think they're going to do with it? Go out there and buy their infrastructure. Go out and buy opportunity. That's what they're going to do. And unfortunately, not everyone's going to get to partake in this investment. Not everyone's going to be able to go out there and invest. But if you do have a big goal and you do have an ambitious plan of investing, with the power of the internet, you can make anything possible. If you put an hour, 2 hours a night in, studying, learning, everything is free. You can learn anything. And if you just put the work in, even these YouTube videos, for example, I filmed this on my cell phone with a $20 microphone and a $20 tripod. Anybody can go out there and put the effort in and learn. If you have high interest rate consumer credit card debt, there's balance transfer credit card offers out there. You can look into it. If you have a credit score north of 740, you likely can go out there and get approved for one of these cards, transfer high interest rate credit card debt onto one of these cards, and just pay down as much as you possibly can. Maybe reduce expenses, bring in a roommate so you have more money coming in and you can pay off that debt faster. But there's a lot of opportunity for those that are ambitious enough to take advantage of it. What do you think about this entire situation? Do you think we're walking into a massive, massive wealth transfer like these billionaires are? They're not what they're saying, what they're doing. You have all these billionaires doing one specific thing. I think it's for a reason. Drop below. Let's have a conversation about it. If you'd like to fix your credit to position yourself for maybe a residential real estate loan or a business loan or a car loan, you're going to need excellent credit to get the best funding possible. So if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Catch you in the next video.